Hello, great to see you again. It's another Tuesday, and we are back on Traders Talk. For those who have joined me for the first time, it's great to see you. And for those who are my avid supporters, it's great to see you again today. And today, I would like to actually talk about a very interesting topic. And as usual, I would say most of my topics are quite interesting. Would you say so? Okay. And let's just do some checks here. How is your day? Is everybody okay? And I think it's quite bad here. I think I'm actually stuck at home for now eight 8 weeks, 8 weeks, 8 weeks stuck at home, and that's quite a sad thing. Yeah, great. And just before we start, and while we are actually waiting for some other people to come in, maybe as usual, I would just go through some more interesting events, some new happenings in the market, and basically also try to see how these kind of things relate to us. Yeah, I mean, I don't know if you have actually seen my what is that newsletter recently. If you don't know, I actually write a newsletter every week. I am a so-called author, not an author actually. A newsletter. What do you call people who write a newsletter? If anyone knows, what do they call people who actually write a newsletter? What do they call them? Okay, let me just take this out here. Okay, then at least I can see both. Yeah. So recently, last Monday, actually yesterday, I've actually issued a newsletter, and this is actually the cover picture. This is actually the cover picture of the newsletter which I sent out. And what it says here is that sorry, we are closed on Monday. So for those who are actually following the events which is actually happening recently in Malaysia, is actually quite interesting. It's actually quite interesting. If you are from Malaysia, you would have probably know what was actually closed yesterday, and for those people who knows what is this. This is actually the Westminster, London. This is actually Big Ben, and I think it's Big Ben if not mistaken. I mean, I've not been to UK for quite some time right now, ever since 2 years ago. Before that, I travel quite a lot to Europe, and each time I am in Europe, I would try to actually drop by London, just before I actually come back to Malaysia. Yeah. So this is actually Westminster, and Westminster is actually also the Parliament for UK, for UK. Yeah. So that's where all the lawmakers actually gather. So for those who are in Malaysia, you know what happened to us also recently. So we were also closed. We were closed. We were closed on the advice of the chief doctor. Yeah. So actually, Mondays are actually a quite difficult day for a lot of people. And of course, if you are working, then it would be actually a tough thing for you to drag yourself to go to work on a Monday morning. Yeah. And of course, sometimes people would just try to imagine it's not even a Monday, and it's actually still a Sunday or Saturday. Yeah. So just because the they try to actually avoid going back to work. Of course, many reasons. One of the reasons is probably they don't like what they are doing. Probably they are underpaid, that they don't feel like going to work on Monday, or probably they have some assignments which they have actually not finished. So of course, for me, I mean, I don't take Monday so difficult. I mean, if I need to go to work, I go to work, right? So it's just part of the job and your responsibility. So just take care of that, yeah, because at the end of the day, the company is actually paying you. And of course, for students or people who actually are going to school, of course, nowadays there's no schools. There's no schools because everybody is actually studying at home. Even that, my children dread to actually start to wake up and start their studies on a Monday morning. Saturdays and Sundays, they're fine. Yeah. Saturdays and Sunday, they are fine to actually wake up even earlier than Mondays. On a Saturday, my younger daughter will actually wake up at 7 a.m. At 7 a.m., she's already awake. You don't need to pull her out of bed. She just goes downstairs and basically very diligently on her computer and start to actually do whatever she is doing on the computer, play games. I would presume, yeah. So that is actually for students. I mean, in the past when I go to school, I was also in the same situation where I try to actually fake that I'm sick, I'm not well, I have a stomach ache, I have a fever. Yeah, I put a hot cloth on my forehead, and then I tell my mom, I have a fever, I don't want to go to school. And she tests the temperature, say, yeah, you got a fever. Why don't you just take Panadol and go to sleep? Yeah. So that was my lame excuse not to go to school. Yeah. So that is Mondays, and of course today I really look forward to Mondays, because Saturdays and Sundays are actually so boring for me, especially nowadays. As you know, I also trade the markets, and I'm a trader. And on Saturdays and Sundays, the stock market is actually closed. So it's a very boring day for me. Although I don't spend a lot of time looking at the screen, but it just makes me exciting and look forward to a Monday, because the stock market is closed, is open, and there's actually really something which you look forward to, because that is something which you like to do. So of course, if you are doing something which you love, so there is never a Saturday or Sunday or Monday. Yeah. So every day is a day where you will look forward to, because you are actually doing something which you like. Yeah. So if you can actually find some job or some work or some passion which makes you motivated to the next day, to look forward to the next day, then that is actually something which you should actually focus at, you see. Yeah. And a bit of some updates in the market last week. Last week, the market was actually quite volatile, and the SPX was actually going up and going down. Even intraday, there were some days which they actually went down. But even having said that, the market is volatile. Last week also they actually achieved all-time high. So it's actually for the SPX, is like every day it's like Olympics right now lah. I mean, for people who actually see Olympics or watch Olympics, every day they are actually making new records, new Olympic records. So to me, SPX is like a Olympic, where every week they actually make a new record high, new record high, new record high, new record high. So I don't know when is the time where they would actually stop to actually make all these records. But up till now, the US market is continuing to actually go all high. in fact, yesterday, if you actually look at the market yesterday, it was actually quite interesting in the market yesterday. The first, I think it was about the first 2.5 hours in the market. The first 2.5 hours in the market, things were quite good. And in fact, if I look at my portfolio was actually up in the first 2 hours of the market. But after that, I think after 12 a.m. Malaysian time, suddenly I see that the gains which I have in my portfolio started to decline. Yeah, started to decline, and when I woke up in the morning, when I woke up in the morning, basically from the time which it went up to the highest level up to this morning when I opened and saw my portfolio, basically the daily profits the daily profits have actually reduced by almost about four fifth of the profits which I saw in the first 2 hours. So that shows basically how volatile the market was yesterday. And I would think for this week it is actually more or less the same, because when you are at all-time high, people would just be afraid that at any time they would drop, you see. So the record is a bit difficult to actually maintain, and the market is very worried, I would say, at any negative news which comes. Basically, that would be the opportunity for, not opportunity, like people would be afraid, and people would start to take profits and start to go on the sidelines to actually wait for the next thing to happen. Especially this week, there are actually a few events which are happening. There are, I think, from today until Friday, FOMC, they have some FOMC speakers to speak for the full 4 days. And till Friday, it is actually the non-farm payroll announcement. Of course, which I think basically the general expectation for non-farm payroll would be increase in jobs. That's it. I mean, what could you expect to happen other than increase in jobs? Because I mean, although COVID is still there, things would actually be much better in most countries except Malaysia. I mean, it's sad to hear that most of the countries are actually doing better, and we are actually heading back. Anyway, that is not for me to comment too much. I mean, things are like that. We will just have to live by it. And then if you look at the NDX is also more or less the same patterns as in NDX is actually the Nasdaq 100 index, yeah, where all the companies like Facebook, Apple, Amazon is actually in there, yeah. And if you look at the thing which actually happened last Friday, where Amazon actually dropped by 7.5%, yeah, just because if not mistaken, they actually met their expectation of their forecast. Yeah, but it's just that they did not meet the market expectation. The market expects them to actually do better, but they did not do as good as what the market expect. So basically, they have actually dropped over 200 over points just on Friday itself. Until yesterday, basically, they were not moving much from there. And I would love to see Amazon drop further back to the 50 moving average, so that I can actually put in some trades to actually see future upsides on Amazon. Yeah, and then of course the other story which is actually going on is the China issues with all the China companies, with the regulation which the China government started with all the tech companies, and then they actually move on to the education sector, where they actually wanted to make all these education companies to become non-profit organizations. Yeah, because the children are too stressed going through all these tuitions just to improve their education because of the competitiveness and all. The China government said that the parents are actually spending too much money sending their children to tuition. In fact, if you recall, for people my age, my age, you not want to guess my age. Yeah. So for people my age, basically the Gen, I would say, am I Gen X? I think I'm Gen X. Gen X. Yeah. So for those who are actually born in the 70s, yeah. So for children my age, right? I mean, if you could recall, the things which we did during our young times, we were only playing football or playing marbles after school. Or cycling, going here and going there. We hardly go for any tuitions. Yeah, we hardly go for any tuitions. But nowadays, you can see how things have actually changed. That children are actually spending a lot of time. What is that? Going for tuitions. Yeah. In fact, I mean, I do also send my children for I would say not say tuition lah. I would say additional class lah. So the only additional class which they go right now is English. Yeah. But there are a lot of parents who actually send their kids every day after school. They continue to study whatever they are studied in school because they just think that the teachers are probably not teaching them well, or they need to actually cope and all. So it's actually quite a sad thing to see children that way. Yeah. But I don't want that to happen to my children. In fact, they are not going so much tuition. Yeah. So then of course Facebook was going down the whole of last week. The whole of last week. The week before, they actually shot up about 25 points because they were trying to actually talk about this metaverse thing, which is basically trying to create a virtual world. I forgot Oculus. Yeah, they had this company called Oculus, where it is actually a virtual glass or something. I'm not sure of that. So basically, that is the next in thing which Facebook is trying to actually put into the market, or even some other industries, including Snap. Snap is also trying to do their what is that? Some glass lah, some spectacles or something electronic, not X-ray glass. Sorry, there's no X-ray glass, but they are creating all this virtual thing where probably you can watch TV or whatever on your spectacles and all this. So these are all the new things. In fact, I for Snap, just before Snap did their earnings, which basically I think the company shot up from $50 to $70, if not mistaken. Just before they did their earnings, I did earnings trade. I did an earnings trade, which basically I would probably wait for it to get my full credit. I did earnings trade. I saw a put. I saw a put. I think about $45, if not mistaken. $45. I saw a put, which is the August 20 expiry. Yeah, I saw a put for earnings play. Mainly for earnings play, I do a two standard deviation move. Two standard deviation move earnings play, and I think I got a premium of about how much was that? Maybe about let's see my position in Snap. About Snap is premium of $55. So little. Yeah, about $55. $55. Currently, it is at $45. So there's another $10 which I will wait for it to expire, because I did a 45 put, and Snap price currently is actually running at $73. Yeah. No, sorry, I did a 50 put. So I did a 50 put, and Snap price is at 73. So basically, they have to drop by $23 before they reach my strike, which is by the end of no, another 3 weeks. Yeah. So it's okay. I mean, I'll just wait for it to expire till maybe $5. Then I close the position. Yeah. So that was what I did for Snap earnings play. Yeah. I'll spend another 1 or 2 minutes to go through. This is actually my income generation secret framework test portfolio, which for this for the last 1 month plus, it has been a bit volatile. It has been a bit volatile because there were some positions which I entered into China stocks. Yeah, like Tencent. I did a put on Tencent. I think it was okay. It was at 480 strike, if not mistaken. But of course, because of all these regulation issues, the thing actually dragged on, and the price continued to drop. I think today maybe about 430 or something. So there is actually the stock was assigned, and basically there is actually a temporary dip in terms of the stock valuation of the shares which I currently hold. But it's fine. I mean, as long as the company is actually a strong company, I would see that it can take some weeks or even some months to actually go back. But on the other side, because of the drop also, I actually put in a lot of entries including the China stocks, because China ETF, things like KWEB and all these kind of things have actually dropped by a lot. And of course, if you see on the long term or even on the midterm, things can actually recover, or at least on the longer term, is actually also a good entry price into the China sector. KWEB is actually more towards Hong Kong listed tech company, I think. And then ASHR is also the on the China side. FXI is also some of the China ETF. But of course, for ASHR and this FXI, the premium are actually not that great. The premium are actually not that great to actually do cash secured puts. Yeah. KWEB is still okay. KWEB is still okay, but you would actually have to do it when the IV is high, when the volatility is high. Because when the volatility is high, you won't get actually a lot of premium out of ETFs which are actually priced 50 and below. Yeah, you won't get a lot of premium. But when the volatility is high, that is actually a good opportunity for you to actually put on these trades and basically wait for the recovery of these stocks, so that your cash secured puts would expire worthless. Yeah. So then, yeah, I mean, I don't want to go through my lizards. Lizards is currently also a great strategy. Where actually you can see from my Facebook page some of the jade lizards which I have actually closed. So that is all I wanted to share with you on some of the non-related subjects for today, and let's move on to the proper topics today, which is share screen. Share screen. Is it? Okay, great. So this is actually what I wanted to share today, and this is actually on investing in property. This is actually on investing in property for what and what I say here is that don't invest in property. Instead of investing in property, you should actually buy property for wealth accumulation. Okay, and there is actually a difference on these two: investing and buying properties for wealth accumulation. And I will actually explain to you why. Yeah. Okay, if you look at these three people here, yeah, the first one is this is actually not a beggar. I put a beggar picture just to show that this person actually have little money, but this person actually want to invest in property. Okay, this is the first type of people who they have a little bit of money, and because of so many people talking about, wow, property market very good, everybody investing in the property market is actually making money, they just go and do it without having a lot of money, but just because they hear people saying it, they make money, they just want to do it. Yeah, so this is the first group of people who invest in property. And then the second group of people are actually people who have a bit of money and want to invest in property. These are the people like me who in the past. Okay, these are the people like me in the past. These are the mostly these are actually professionals, people who have made who has a bit of spare money, I would say, who has a bit of spare money, and basically they're looking for ways they can actually keep and put their money. So they go into buying property as an investment, and then basically, of course, when you treat it as an investment, you basically will actually rent it out. Yeah, you rent it out to actually generate rental income. Yeah, and then there is actually the third type of people. The third type of people are just wealthy. Yeah, these are wealthy people. You can see from the money and the tie which they wear and the cigar which they smoke. Okay, this depicts the wealthy people. Okay, and what do these wealthy people do for property? They don't invest in property, they just buy property. They just buy property because they have so much cash, they don't know where to put the cash. They just buy property to accumulate wealth. Yeah, accumulate wealth. So these are the three type of people who get involved in property. The first two are actually so-called investing in property, whereas the third type of people are people who just buy property. Yeah. Okay, so out of these three category, me for myself, I used to be in the second category, and you can see the picture also. These are people who have a bit of money. They are actually probably buying property and overcommitting themselves. That's why you see that they are underwater. They wanted to sink, then they are just stepping above the chair. They're just stepping above the chair because they overcommit, and basically I would explain what caused them to overcommit, and basically what did they get into by investing in property. And the third type of people is people which I aspire to go to. In fact, I'm actually moving towards trying to become the third type of people, which is actually wealthy people who just buy property. Yeah, and of course, if you stay until the end of this talk, I will actually show you how you can actually move from whichever category you are, whether you are the first one, the little money guy, or is a bit of money guy, or even the wealthy person. I don't need to teach you because you are already wealthy, right? Probably I need to actually learn from you. So if you're in category 1 and category 2, yeah, so this show will actually tell you why you are in category 1 and 2, and basically what is really happening to you, and why you should actually move yourself to category 3, and how you can actually move to category 3. Yeah. Okay, great. If you have any comments so far, if things are getting great, give me a thumbs up. I have really not seen any thumbs up since I have actually started 30 minutes ago. If you are if things are good, thumbs up, give me a thumbs up, share with your friends before I actually start this topic, which is basically very important, and a lot of people and people should actually know about this. Yeah, so I will just show here an example. I'll just start to actually show here an example. And I will start to say that you actually want to buy a piece of property. And I took this property, which is basically a residential condominium or apartment, you call it a condominium, a residential suite or something. Yeah, this is actually a development in just next to Mid Valley, the largest shopping center in Malaysia. It's just 5 minutes away from Mid Valley. And basically this is actually a 2-room apartment or condominium, which is actually selling for 580,000 today. Yeah. When this property is launched, you buy from the developer at $700,000. $700,000. Yeah. And today it is only $580,000, which is basically about 2 years 2 years after it is handed over. Can you imagine if you pay 700,000 and today's market value is 580,000? So you basically lost 120,000 of value within 2 years 2 years time, which is actually a lot. So the first thing is not everybody makes money in the property market. Yeah. If you buy and sell, you not necessarily you make. It is actually very difficult to make, at least for the common people. I mean, there are people who claim that they can buy 10 house or whatever. I mean, I have not seen common people like me generating or profiting a lot from the property market, and here's why. So for a property of 580,000, let's say you actually take a loan of 90%, so you need to actually pay a down payment of 10%, which is 58,000. And then you take a 30-year loan. Now the interest is about 3.5%. You take a 20-year loan. You take a 20-year loan, and then you need to actually pay what is that? Monthly installment of $3,000, 3054. This is based on the property calculator on the website, yeah, which I took. So you need to pay $3,000 to own a property, which you buy today lah. The next day, tomorrow, you go and buy, take a loan, 580,000, worth 700,000 2 years ago. No, not 2 years ago. Before it developed, probably about 6 years ago, it is worth 700,000. Today is only worth 500,000. But doesn't matter since it's so cheap, right? Let's say you go and invest in this property, and here's what happened. The first category of people will do this, yeah. They will do this. Okay. So what they do is that, like I said, they would actually take a 580,000 property value. They take a 90% loan. From the interest calculator just now, they will actually pay 211,000 interest over a period of 20-year time. Yeah. And then this property today, I checked the website also, you can actually rent this property out at $1,800. $1,800. Today, you can actually rent it out, fully furnished. A year ago, the same property, you need to actually rent it at $2,100 or $2,001 to 2,002, fully furnished 2-bedroom apartment. Today it is only $1,008. So basically, the rental after 1 year has actually dropped by $300. If you talk about even earlier, this property was actually renting out for about 2004. If there are any property agents out there who is actually listening, if you agree with me, you can actually say yes, that's correct. That is really true. Yeah. And then what happened is that on the rental of 1,008, you have expenses which you need to actually cover. And per month, I just take this 211. Just for simplicity, I divide it by 20 years and I divide it by 12 months after that. So you get interest of $879. This is just a simple calculation. So say you are paying a monthly interest of $879. Out of the $3,000 of loan repayment which you pay, $879 goes to the interest. Yeah, make that assumption. And then you have the maintenance fee to pay to the condominium. It's about $350 per month. Yeah, you stay or don't stay there, you need to pay $350. Yeah, you pay all this for the facilities which your tenant enjoy, the swimming pool, the gym, the tennis courts, and the sauna, and all these kind of things. You pay for them. It's like you are subscribing to a gym, but you are subscribing it on behalf of people lah. Can you imagine that? Yeah, you rent them the 2-bedroom apartment. On top of that, you need to subscribe for them their facilities and gym. So this is what you're doing. So you are paying another $350, and then you need to actually fully furnish the property, right? So when you fully furnish the property, generally you would say you need about 20,000 minimum. 20,000 is the minimum, you know. Minimum is like basically bare stuff, all the cheap IKEA stuff inside, you know. Yeah. And of course, since you are only spending 20,000 on it, right? So basically, after 5 years, you need to actually replace all the furniture. And that is another 20,000 5 years later. Yeah. So I'll just take 20,000, you amortize it over 5 years. So each month you are amortizing $333. So all in your total cost, to actually own this unit, which you rent it out to a tenant, is $1,563. And on a rental of 1,008, that leaves you with $237. How great is that for an investment of this property? You invest property, we should take a loan of 552,000 from the bank, and then you pay a 3,000 monthly repayment, and at the end of that month you will have $237 in your pockets. How great is that? So if you find that interesting, maybe you can give me a thumbs up, or you can comment on the chat box. So this is a fact. This is a fact, and in fact, a lot of people are actually doing this. And the net income per year is 2,849. Yeah, great income for people who have little money but want to invest. It's good income. I mean, 237 extra a month. Why not? Yeah, of course. If the rental goes down by another $300 a month, then you would actually go into a loss, right? A loss, yeah. So let's say you just stay at 1,008 for the next 20 years, yeah. So you will get $2,849 a month of net income. Okay, the next thing which I will actually move in is cash flows, yeah, because net income sometimes can be different from cash flows. Okay, so what is the cash flow? Cash flow is basically real cash which you actually need to churn out from your pocket, yeah. And basically the cash flow from here is actually the loan installment. The loan installment which you actually need to pay, that 3054 just now, 3054. For 12 months, you actually need to actually pay an installment of $36,648 a year. So you pay 36K a year cash flows which you need to actually pay. And then basically you were generating rental, right? Remember, you were generating rental earlier. Yeah, you were generating rental of 1,008 a month. So, but of course, after netting off the expenses, you will actually generate a cash flow of $13,400. I add back the interest lah. That means I add back the interest without interest, because the interest is already included in your loan installment here. So basically, I adjust back the interest here. So your cash flow is about $13,400. That means for people who have little money but want to own a property and rent it out, they would face a negative cash flow for the year. Negative cash flow of $23,000 means that they need to take $23,000 a year from their income other places. That means from their salary, or if they're doing a business or whatever, they need to take 23,000 out to actually pay for this property, the cash flows. They need to actually take it out, yeah. And then after that, what is their returns? And what is their returns? So I'll calculate the returns. Very simple here. What you have actually paid out is 58,000 for the down payment. For the down payment, remember, you paid 10% down payment. So that is the cash flow which you need to actually fork out on day one when you buy this property, 58,000. Then after that, I would actually put in the net cash outflow that you actually need to top up for the property. The net cash outflow is 23,000 a year, which is basically this figure here. Which is basically this figure here, yeah. This 23,000 figure here, you need to actually pay. Then basically your cash flow per year, that means you have cash stuck in this investment of $81,000. So $81,000. So $81,000 over the return of net income of $2,800. What is your return? Your return is 3.5%. So for all the hassle you go through and the risk which you take, if the rental price go down by $300, you will actually make a zero or negative return on this investment. Yeah. So for people who have little money but want to invest in property, so this is the effects which you are probably facing right now. You get a very low return of 3.5%. Okay, so if you don't take this, you just put your money in the bank, you can actually get at least 1.8 or maybe 2%. Yeah, so you don't need to actually go through all this hassle. Yeah, but for this, you get a higher return because of the risk and hassle you take. Yeah. So this is the first scenario for little money but want to invest in property. The second one, the second type of people who is me in the past, or even maybe now I'm stuck there, is that people who have a bit of money and want to invest in property. Okay, so this scenario is actually a bit different. So the property value is actually 580,000, and because this person has actually a bit of money, although he take a bank loan, this person might not owe the bank any money, because he might a lot of people actually owe the bank money on the loan, but they have savings and they actually park this whole savings into the bank loan so that they don't need to pay interest. So this is actually the scenario for that. So what happened is that they park 580,000 with the bank. So when they park 580,000 with the bank, they don't owe the bank any interest. So the interest that for them is zero. Okay, let's look at what will happen if their interest is zero. Rental is still the same, $1,800. And then the expenses, they don't need to pay for interest. The maintenance fee, the gym that you pay for other people will still be there. And then the furnitures, all this will still be there. So your net expense is $683. And 1,008 less this, you get $1,117. So then a year, your net income is $13,000, $13,400. Yeah. So that is actually your net income. Then come to your cash flows. Yearly cash flow, you don't have any cash flows because you already parked the full loan amount to the bank of 580,000 to get this property, zero outstanding. Okay, and then net income, which is this $13,400. Then that is then this is not a negative cash flow. This is actually a positive cash flow. Yeah, my error, my bad. So you get a positive cash flow of $13,400 a year. Okay, and then your investment. What is your investment committed? You have committed $580,000, your hard-earned cash you park there to offset your loan. At the same time, you own this property, you rent it out to XYZ, and generate 13,000 of cash flow a month. Sorry, a year. So basically, your total investment would be 580 minus the cash flow which you generated, which would be 566,000. Yeah, 566,000. And then what is your return? Your return would be $13,400 divided by this 566. Yes, because that is actually your capital to go into this property investment. So your return is 2.4%. Is it surprising that you are richer than the first guy? Is it surprising that you are richer than the first guy? You have more money than the first guy. The guy who has more little money is even smarter than you because he's earning 3.5% interest, 3.5% return. And you having so much money, your return is only 2.4%. So the guy who don't have money is actually a smart person because he is actually leveraging a bit on the borrowing, the loan which he took to generate income. So that guy who have little money is actually smarter than me. Can you imagine? That I only earn 2.4 and this guy earned 3.5. Yeah. So don't be mistaken that if you have a lot of money and you are actually saving interest, that does not mean that you are actually generating more income or your return on investment is actually higher. Yeah. So that is second scenario, and this is actually very common for a lot of professionals. I used to be there. I mean, a lot of people I know are also there. You see, so this is actually the second scenario for people who have a bit of money and want to invest in property. Okay, great. Who would like to see the third scenario? The rich guy who just buy property. Who would like to see? If you like to see, maybe you can actually give me a heart. You give me a heart, and I will share with you how to go move into rich guy buying property. No heart, so sad. Okay, right. Okay, never mind. Anyway, since you're here, I will just share with you how to do that. Okay, this is the wealthy guy. This is the wealthy person who just buy property. Basically, he just take the money, he buys it. And how does he buy it? Okay, this is what rich people do, which the first and second category of people might not know, you see. But if you don't know, does not mean that you cannot actually move into this category. In fact, anybody in the first two category can move into maybe not the first category lah. The second one lah is easier lah. The first one need to make more money first lah. The second category of people can easily move into this category, become wealthy, and just buy property to accumulate wealth. And here's how to do it. Firstly, you got to actually think of resources. What is your resources? Your resources is your cash and your savings, right? So that is your resources. In the second category of people, they take their cash and savings, which is that 580,000, they put it in the property. They put it to offset the bank loan. And at the end of the day, generate 2.4% return. Yeah. So that is what they did. And they did it wrong. You should not do it that way. You should do it this way. Because resources are limited. What you do with this 580,000 which you have is actually very important, extremely important, because that is your resources, correct now. So if you make best use of your resources, that is where the output would be higher, right? So what this rich guy do, or this guy who was in the second category, they don't do it the second way which I showed you. They do it this way. What they do is they take that cash of 580,000 they have, they put it in income generation. What is that? Income generation vehicle yeah, which can actually generate them more than 2.4%. Very easily. If you are blind, if you don't know nothing, you just buy put your money and buy an ETF in SPY, buy a SPY ETF, you would have made 18% last year. Okay, you take 580,000 on 1st of January, buy SPY ETF. That means the S&P 500 ETF. You buy ETF, put 580,000. 1st of January 2021 until 31st December, you would have generated 18% return. Okay, 18% return on 580,000. Yeah, which basically makes about 100 over 1,000 of returns, as compared to the earlier, which that guy was actually generating. There is some, okay, compared to the earlier guy who was actually generating only 13,000 cash flows or profit. You do that, you get about 100 over $1,000. Yeah. So basically, I put in here an assumption that you can actually generate a return of 24%. Easily 24% by using a vehicle. Of course, I personally use this vehicle myself to actually generate at least 24% returns a year. Yeah. As a trader, the minimum basically I look at is the simplest, I would say, the simplest strategy which I implement. I can generate 2% a month, which makes it about 24% a year. So assuming that this is possible, you generate 24% a year, you generate a cash flow on 580,000 of capital, 139,000 a year. Okay, and your profit per month is $11,600. So each month you generate $11,600 on a capital of $580,000. Yeah, which is 2% a month. And then basically your annual cash flow is the same as your returns, which is $139,000. Yeah. Okay. Then what you do with this thing, what you do with this profit monthly, is then go and buy a property. Correct now? Take the loan from the bank. Take the loan from the bank of 552,000, or even take 580,000. Doesn't matter. The numbers will not be much different. Then go and buy the property, but don't put your money into the property. Go and borrow from the bank, and take your own money to generate a higher return of 20 or 24%. Okay. That means don't invest in the property and make that 2.4%. Invest in other things that makes you more than 2.4%. And in this case, the trading strategy which I apply of 24% a month. Sorry, 24% a year. 24% a year. If you know any strategy that gets 24% a month, let me know. Okay, so you do that. And can you imagine, just now you were paying $3,000 what is that, monthly installment. You are now generating close to 4 times that $3,000. You can actually use this and pay for 4 months installment. Yeah, that means you can actually buy 4 houses. 4 houses, not 1. 4. That's why you see buy property, accumulate wealth. So 1, 2, 3, 4. So with the same amount of cash which you have in the second category, you can actually accumulate wealth and go and use the cash flow generated and buy 4 property. Of course, don't buy. In reality, don't buy 4 unless you have maybe a few $1 million. Then you can start to buy 4 . But what is possible? But this is actually really possible. If you just look at the math, it's actually possible for you to buy 4 property with the same amount of resources. It's just that the second guy put your resources into the wrong thing, whereas you, as the rich guy, put your resources differently to generate more returns, and then only invest in property. Yeah. So that is what rich people do. That's why rich becomes richer, because they know all these secrets. Unfortunately, I only found out this kind of secrets too late, you see. Anyway, if you have seen this today and you found this out, this little secret out, please go and evaluate your position and see how you can actually rectify it. It's never too late to rectify. So again, the comparison of these 3 scenarios, where you have this invest in property with little money. This guy who have little money and want to invest in property. This is also the smart guy lah. This poor guy here in the middle is actually the worst position, just generating 2.4% a year. See? Whereas this guy, he's actually generating 3.5%, 3.5% a year lah. 3.5% a year. Yeah, but of course, this guy, the problem is that he needs to fork out cash of the $23,000 from his salary or whatever he's earning. If he can do that, then he will make this 3.5% lah. If he cannot do that and want to invest in the property, that is where the bank lelong will come lah. You know the bank lelong? That means they foreclose your property if you cannot even generate this but want to invest in property. Yeah. Of course, if you lose a job, you have a job and you lose a job, then highly likely you won't be able to actually generate this cash, and highly likely your property will be foreclosed and you lose everything. Yeah. So then this is actually the position where first guy here, second guy here just makes 2.4, whereas the third person who actually use his resources to generate higher returns will actually make money to pay for the property. That means this person actually buys the property. He doesn't invest in the property. He is actually already in the stage where he is actually accumulating wealth, accumulating assets. Yeah. Whereas all these two guys here is actually, I don't know what they are doing, accumulating liabilities. Yeah, this was me. I was here drowning myself with too much commitments. You see, yeah. So basically, this is why you should never invest in property if you are doing the first way and the second way. You should actually move into the third method of the wealthy people, how to actually accumulate wealth through smart utilization of your resources. Yeah. So how many of you find this useful so far? I mean, something which you have not known or probably have heard about it, not clear. So today, this would actually give you a lot of clarity that this is the scenario which you are in, and whichever scenario which you are in, try to actually move on to the third one, which is the wealthy guy with the money and the cigar. Yeah. So this is actually where you actually should aspire to go. Yeah. Okay, great. So comes to how I generate income. Yeah. So as I said, uh, uh, I'm Ming Hon, and I am actually a trader. I'm actually a trader in the stock market, and basically I specialize in trading options. I specialize in trading options to generate income, and I teach people who aspire to also generate income, additional income as a second or third source of income, so that this can actually help them and their family to actually increase their financial ability to care for themselves and also their family. Yeah. So with this, I have actually currently doing this training and also introducing this framework, which is called the Income Generation Secret Framework. Yeah. So this is basically a framework where I teach people how to actually generate a consistent income with a targeted return of 2% a month. That's where the 24% comes into the picture. This is the same model which I personally use to generate income and to actually move into the third category of people, which are the wealthy people and the people who accumulate assets. Yeah. So last week we did a launching. It was actually quite successful. It was actually quite a rush launch because I promised people who has actually come here for over maybe 1.5 months that I will actually launch this, and then I did it last week. And this Sunday itself, I would also go through again, basically to explain basically how you can actually learn the same model which I applied to actually create my income portfolio to generate returns that you can actually put to use, whether to buy a property or to actually take care of expenses and whatnot. Yeah. So that is actually on Sunday, 2:30 p.m. 2:30 p.m. And for you to actually register in the event, you can actually register through this link here. To this link here, take a snapshot of this. It will be 2:30 p.m. This Sunday. I will actually go through this 1.5 hour. Yeah, I think it's a 1.5 hour where I would share with you how I actually do it. I will share with you how I actually do it, and you can actually learn the ways of the wealthy if you actually aspire to move into that category. On top of that, there's another event which I am part of also, I am actually part of a group of I would say edupreneurs, a group of edupreneurs, because part of my job nowadays is also to educate people on financial literacy, to educate people on financial literacy. That's why we come up with all these trainings and all. So this there is actually coming event on this. There's actually an event coming on, which is on 21st of August. On 21st of August, this is actually an international event. This is actually an international event, and we actually call it World of Wealth. And this is the second running of this wealth series, where we have the coaches, the financial coach, which are actually doing very well, most of them in the financial and also in the business areas, where they actually teach people how to generate wealth, how to generate wealth. And here I think you have about 2, 4, 6, 8, 10, 12. Yeah, you have about 12 life coach, which would basically teach you ways to generate income. And this goes from people like Alvin is in the stock market. Katerina is actually doing LinkedIn, how to actually do a LinkedIn profile and how to actually market yourself. Amos is doing e-commerce. Leslie is doing Bitcoin. Bitcoin. Lynn is a financial pharmacist, where basically she teaches people how to actually manage their finance, and actually how to accelerate accelerate their time, their path to retirement, like how to actually speed track this. They can actually retire early. Ken is actually investment. He teaches people how to actually invest safely in the stock market. Lily and Hardy. This is Lily and Hardy. Lily and Hardy is actually doing what is that? Investments and specializing on options. Jolene is also a financial coach. Ken is doing investments training. This is me lah. I don't need to tell you what I do. I'm actually a trader. Why I call my trader? Because I teach people how to trade the stock market using options. Yeah. And of course, as a trader, we try to actually achieve better than market returns. In fact, I try to actually achieve higher than investment return as a trader. Yeah, because I'm an active trader. And Vernette is actually an e-commerce specialist. And she teaches people how to actually do e-commerce online. So you have all these coaches. Which we will have a one-day event from 21st August, 9:30 to 4:30 p.m., where all these life coaches will actually share with you more of their experience and how basically you can actually generate wealth to move to the wealthy category, where you can actually generate more income for whatever purpose which you desire. So this event is World of Wealth, and we have a Facebook group right now. Actually, we have not really started to market it, but because I'm having this event today, I would just like to start to promote it. You can actually go to this Facebook group and join this group, and then basically the event would unfold during the next days, where you can actually start to register for this event from the Facebook group. Yeah, I will also share with you the registration links through my what is that, through my Facebook page later on, when it's actually live. You can actually make the registration. So you are the one of the few people who know about this, if you have come to this traders talk, but please join the Facebook group, so you are connected to the event when we actually launch. So that is all from me today. That is all from me today, and I hope that you have actually learned some things today, which is actually beneficial to you. And if you find this beneficial to you, please share this to your friends, because it's very sad to see people who actually fall into the wrong category in terms of trying to generate wealth. And it would be good if they also know how to actually rectify what they are actually doing wrong, and actually move into the wealthy category and asset accumulation phase. Yeah. So that is all from me. Thank you for joining me today. And for those who want to listen to me talk more on how I do it, then please register yourself at the webinar this coming Sunday. Sunday. Register yourself at the webinar. Take a photo of this link, register yourself, and I will see you on Sunday. Otherwise, I will see you at the next Facebook Traders Talk next Tuesday, same time, 7:30. I will see you next week on Traders Talk. Bye bye.